All right, good evening to all the participants. It's Charles here. I'm Charles from Philip Capital Kota Damansara branch. So, let's start our webinar tonight. So, before we start, this presentation is just for sharing purpose and some knowledge sharing. So, uh, there's no buy call or sell call. This is just for sharing. So every investment is required research to be done. So if you would like to invest in anything, please do your research before you start to invest in anything. So just a little, I would say a brief who is Philip Capital. So Philip Capital is actually established at during 1995. So we are wholly owned subsidiary of Philip Capital Holdings Sendirian Berhad. So previously we actually being known as Philip Futures Sendirian Berhad. So we actually is one of the licensed broker in Malaysia. So we are licensed for doing securities and derivative product. So that's why we are the one of the holder of Capital Market Service License (CMSL). So just in case if outside there anyone asks you to invest in their company or use their platform to invest, so better to check out their license uh, at the Securities Commission Malaysia website. So at their website, you can straight search our name, Philip Capital Sendirian Berhad. Then you will see our license number so that you could verify that we are licensed broker in Malaysia. So these are all the branches in Malaysia. So regardless where you're from, if you need any help from, let's say you want to open an account or you want to know more about what are the services that we provide, you could reach out to any of the branches listed here. So we actually are a multi-awards winning broker in Malaysia. So these are the award that we have won previously. So we actually have built up our network not only in Malaysia and even in the Europe or America. So as you can see here, this country is actually the country that we have a office there. So that's why we build up our global network. So due to this reason, so we actually cover a lot of product, like for example, from Bursa Malaysia to the US CME. Some of you might don't know what is CME. So CME is Chicago Mercantile Exchange. It's mainly doing those futures product. So Philip Capital is actually could be your one-stop solution for your trading or investment because we offered variety of products from stocks to futures, and even we offered contract for difference. Yeah, actually in Malaysia, there's actually not much of broker that actually provide contract for difference (CFD). So if any of you would like to know more about what is CFD, you could reach out to us. But of course, CFD is restricted to sophisticated investor only. So if you want to know more about this, you could reach out to us. So why do you choose us, or what makes us the best option for you to choose us as your investment broker or trading broker? So we actually multi-award winning multi-asset broker. We have 24-hour broking and execution support. And even if you want to some advisory services, we do provide it. So actually, next is the market news. So we basically will send out those daily commentary to our client. So if you want to know more about this, you can. Why not you just try out to open an account with us and receive our market news. Perhaps you could find your opportunities there. Next is we actually, like I said previously, we actually provide a lot of products from stocks to derivative. So derivative, let's say you want to trade for futures. One of the hottest product in Malaysia is the FCPO, crude palm oil futures. So if you want to know more about this, again, you could reach out to us. So lastly is we do not charge for any platform fees. So how to start? To invest with us or trading with us. why not you just, if you are free, you can just arrange a one-to-one coaching with us, contact us and arrange for this, and then you from there you could learn something, or you from there you could spark your interest in investing or trading. So we also provide the services such as weekly market calls. So on every Monday, 11, we will have market views and updates by our Philip Securities Research from Singapore. So from there, you also could get some updates of the markets. Let's say the updates that could spark or could lead you to make a better investment decision. Next is we also provided live counter technical analysis also on Monday, but this is at 8 p.m. So if you want to know more about what are the upcoming seminars or webinars or any of the events, you could just scan the QR here. Or if you are using phone, you can just take a screenshot first, then you can scan afterwards. All right, so next is this. This is about the opening account. So as of now, we basically just do the account opening through online. So it is hassle-free. You could just open your account in your home, chill and relax. So just a little bit sharing of what are the trading platforms that we are using. So first of all is our Philip Nova. So this Philip Nova is mainly for those futures product. So if you want to try out our futures product platform, so why not you just scan the QR code for the demo account, then you can explore our platform, and perhaps if you want to know more how to use the platform, you could just arrange a one-to-one private coaching with us. So I'm proudly to share with all of you is that our Nova chart is actually powered by TradingView, one of the, I would say, a powerful technical chart provider in the world. So if you have an account with us, the Philip Nova is actually free to all of you. So from there, you could just, for TradingView, normally you might need to pay a premium, or you have to subscribe to their plan so that you could use their platform with the updated data. But with us, we just give it to you. Next is the Poems Global. So this Poems Global is, I would say, more related for today's webinar, because Poems Global is for the stocks trading or investing. So for Poems or for Philip Capital, we actually offered for the Malaysia market, the US, the Singapore, the Hong Kong, and also the Australia market. So just to share a little bit of, I would say, our commission rate on the US shares and ETF. So right now we actually offered 0.02% or minimum of $4 of the commission charge. But of course, this will be depends on whichever high. So let's say you trade for a certain amount, then we do the calculation. Let's say the percent you times with 0.02%, then it is below $4. Then of course, we will just charge you $4 for this. So next up is our CFD platform. So this platform is used to trade for CFD only. So just don't get confused. We might have a lot of platform, but no worries. You can just reach out to any of us in Philip to get more clarification on this. On let's say you are interested in trading a futures product, then you can just use the Philip Nova that I shared just now. All right. So next is share a little bit of our current promotions. So for current promotions, the first is the SGX listed Asian index futures. So right now we are charged a quite low commission rate for the SGX Asian index futures. So if you are interested in this, scan the QR code for more information, or you could just reach out to us. Next is since we are offered for the Singapore shares stocks market. So yeah, we currently charge 0.1% for the Singapore shares. So I would say this is quite competitive brokerage rate. So this promotion will end until 15th of July. So if you found any hidden gems in the Singapore shares, why not open an account with us, trade with us, or invest with us at a lower rate? So without further delay, so I believe that one is considered an appetizer or more. Let all of you know who is Phillip Capital, what is Phillip Capital, what kind of product that Phillip Capital provide or offered. So right now, let's dive into our today's topic, the Malaysian empowerment, wealth accumulation in stock market. So these are the brief outline of today's webinar. So let's start with how to accumulate wealth. Usually in Malaysia or in the world, people just tend to do the savings or save an amount of money, let's say every month or every year. So let's say you want to accumulate your wealth by saving every 500 ringgit every month. So basically, you just fork out an amount of your income, and you just save it somewhere, and perhaps you just save it in the bank, and the bank does, I would say, don't really provide a competitive rate to all of you, I believe. Next is some of the people will do investment to accumulate their wealth. But of course, before you entering into investment part, I would suggest that it is important to save up an emergency fund first before you entering to the investment space, because although not to say investment, when you put your money in investment, you can't really take out your money, but the times consumed to take out the money is relatively long as compared to you save your money in the bank. So it is better to save up some of the money in the bank first, let's say 3 to 6 months of emergency funds. Then from there you can start to do your investment. So what kind of investment usually people do? So people tend to invest in funds, or some of you perhaps, buy gold. I believe recently the news says that the gold hits a new high, or even some of you could buy the bonds, and some of you might do investment in stocks. So for today's topic, I will more to the stocks part. So as you can see the logos here, these are actually some of the blue chip stocks in Malaysia. But no worries, what is blue chip stocks? I will explain later. So for the beginner, if you are new to this investment area or space, I would say it is better to start off with some blue chip stocks, because blue chip stocks usually their the risk is involved won't that high as compared to the stocks that are not blue chip stocks. So what is blue chip stocks? So it's very simple. It is just the top 30 companies that made up the FBM KLCI index. So what is FBM KLCI index? So it actually stands for FTSE Bursa Malaysia Kuala Lumpur Composite Index. I believe everyone know this because sometimes, when the economy goes bad, people will tend to use the index to measure how does the Malaysia economy currently is. So yeah, like I said previously, it is the top 30 companies that made up the index. So basically, it represents the top 30 the performance of the top 30 companies listed on the Bursa Malaysia. So again, like I said, shared the example previously or just now. So some of the investor will use this index as a parameter to measure the Malaysia's economy. So let's say today's the index fall for 100 points, 200 points, and perhaps it could be, or it could mean that the Malaysia economy is turning bad, or what are the people tend to remove or withdraw the money from the stock market. But of course, the economy itself is a quite huge topic. So although investors are using the index to measure the economy, but there are also other factors could affecting the economy as well. So let's so here is one of the blue chip stocks I would like to show. So from I want to show you all like how does stock market really could help you to accumulate wealth uh, in the market. So as you can see here, there's a two line. No worries, I have a example or scenario later on. So for example, let's say you entering the market since its first trading day. So uh, time has passed, like up to I believe 2025, reaching to its one of the highest point. So you could have already generate your money from from let's say you from 276 to 1466. So you actually have generate 1190 through investing this activity. So even if you are later entering the market, let's say you're entering between 2019 and 2021, so you could still generate a 53.51% of let's say of the return. So let's say you have invested during that time 955. So again, your money could become 1466. So from there you actually get a return of 511. So from here you can see how really how you can accumulate wealth through the stocks market. But of course, I'm if I keep saying the good side of accumulating wealth through the stock markets, I would say it is quite not responsible to all of you. So next, I will share another example, which is on the another side of the stock markets, which is as you can see here, this is the Sakura Energy Berhad stocks chart. So let's say you entering the market during its beginning or during its first trading day. So you just invested 212 ringgit, but lastly you just in I think to the recently their price is just 0.035 cent. So your money could literally become just 3 ringgit and 50 cent. So imagine if you entering later, which is its at its highest point. So you invested 470 and your money also become 3 ringgit and 50 cent. You are already lost for 466.50 cents. But just add up or for your information, this 200 or the numbers here is actually referring to 100 units of shares because in Malaysia, the minimum purchasing units is 100 or sometimes people will tend to say one lot. So you from there you can derive as one lot is actually equal to 100 units of shares. All right. So how to pick the shares or how to pick the stocks is crucial for you in accumulating wealth in the stocks market. So next is I want to let's start with the most beginning or the entry level of knowledge. So what is stock market? So first of all, you have to know what is stocks. So sometimes people will just call it as equity. So basically, it just represent the ownership of of a company. So next is what is stock market? So stock market is basically a place for you to buy or sell the stocks. So it can be differentiated into two market, which is the primary market and the secondary market. So for the primary market, what is primary market? So usually this is a place for those company to raise funds through equity. So they, let's say they want to raise 100 millions of funds, then they don't want to take up a loan, so they could choose to use equity to fund the company. So when they fund the company, they will issue a new securities to investors. So it could be stocks, but of course, in stock itself has a lot of category. But let's don't dive too deep for this first because this is an entry level sharing. So the company will just issue the normal shares to the investor. So what are the events that would occur during this fundraising activities? So first of all, of course, the IPO, I believe this is more well known to everyone here. Next is private placement. And last is the right issue. So private placement and right issue is actually similar but slightly different. So for private placement, it's more like, oh, I want this investor to invest. And the investor is also intended to invest in my company. Then we will sit down and have a talk. And from discussion, they will know that how much does the company will like for example the how many shares will the company issue to the investor and how much the money that the investor will pump into the company. So for right issue, again, it's like the company has want to do the right issue, so they will go find their current investor and they will issue a letter or notice. So they will go to the investor and say, hey, I plan to do another round of fundraising. So I would like to have a right issue. So did you want to subscribe my new shares? I will issue a new share. So do you want to subscribe? So that is a right issue. So right issue, you will have the option to choose whether you want to subscribe the shares or don't want to. So it is really up to the investor for right issues. Next is I want to share a brief illustration of how primary market works. So there's a company ABC and there's a investor. So the company ABC would like to raise funds and the investor have cash or money that is uh, not in use. They want to generate more using or make the money to work for them. So the company will go find any investment banking or securities firm. I believe everyone know what is prospectus. So prospectus is actually a book. So inside the prospectus will says about what is the company's current financial position, what is the future plan, and what the purpose of the company to use this fund that raised from the stocks market. So the investment banking and securities firm will assess the suitability of the company, sees whether they have reached the benchmark or the requirements set by the regulator in Malaysia. So if let's say everything is passed, then they will start to drafting the prospectus and even they will launch the prospectus to the investor. So from this activity, then the company will issue shares to investor, and then there will be a prospectus by the investment bank or securities firm. So from there, you could decide whether you want to invest in this company or not. So if let's say you want to invest in the company, then you can just apply to subscribe their IPO shares or their new shares through your bank, or you just tell your broker, you just say, hey, I want to subscribe these shares. Could you teach me how to subscribe the shares? So after you have applied and you have put in the money to a bank, usually people will just the bank will just collect the investor money first. So when it listed that time, the bank will remit the funds that have collected to the company. So if let's say you are interested in buying IPO shares or you actually IPOs investor IPO investor. So here's a little note for you is that please please remember the open and closing date of the IPO's application. Because this is why this is a very important thing is because let's say you have analyzed or you have do your research on upcoming IPO company, then but you miss out or you overlook their closing date of application, then by the time you want to apply and the application is actually already closed, so you have missed your opportunity. So please remember the open and closing date of IPO's application. Next is I want to share a little bit of secondary stock market. So this is, I would say, it's more easier to understand as compared to the primary stock market. So basically, it's just a place for investor to buy and sell through an exchange, buy and sell the stocks. Sorry, I think I've missed out a little bit things here, but no worries. So yeah, buy and sell among the investors. So here is a brief illustration of secondary market. So there is an investor A and investor B, just like you and me. Then there will be a stock exchange. So in Malaysia context is the Bursa Malaysia. So let's say you want to sell the stocks and I'm the one who want to buy. Then I could just go to the stock exchange. You also could go to the exchange. So you could do a sell at there and then I could do a buy at there. But of course, this is a I believe everyone know about this. So just to share a little bit knowledge of what are the Malaysia stock markets. So in Malaysia, actually there is a three, not to say three stock market, but three category of stock market, which is the main market, the ace market, and the lead market. So if you want to know more about this, you may go to the Bursa Malaysia website to know about, like, let's say, what is the requirements for the company to be listed in the main market, or what is the requirements for the company to listed in ACE market. But for the lead market, it is actually just for the sophisticated investors only. So usually in lead market, those companies not a big company as compared to the main market and the ACE market. So after you have know what is stocks, what is stock market, so I want to share with you how to start to invest or trade the stocks. So first of all, you'll find a broker, a licensed broker. This is very important because I really wish none of you or your friends or your family being scammed because I believe there's a lot of scam cases in Malaysia. So finding a licensed broker is very, very important. So if let's say someone is come to you and say, hey, we are a broker in Malaysia. Do you want to use our platform to invest in stocks or in any other financial instruments? So the steps the things that you could do is search the company first at the Securities Commission Malaysia website. So they actually have a checker for you to check whether this company is licensed by them because Securities Commission Malaysia is actually the regulator for all the broker or any firm that provide investment schemes. So if let's say the company or the broker that find you is not being licensed by them, so you have to be careful because I would say some of them is a scam. So they could just, when you deposit your money, they could just take your money and run away, and you couldn't get back your money, right? So this is very important. I want to share with all of you. So after you have found a broker, then you can just open an account with them. So you can choose to either open a nominees account or a CDS account. So what CDS is actually just stands for Central Depository System account. So these two actually not much different, just that the CDS account will, when you're using CDS account to buy or sell the shares, it will directly under your ownership. But for the nominees, sometimes it will be under the company's ownership. I mean, I mean the broker ownership. Let's say you open a nominees account. So let's say you buy DNB shares. So if you buy a lot, let's say you have become their top 30 shareholders. So usually in the annual report, they will listed the top 30 shareholders. Then if let's say you are using the nominees account, of course your name will be still appeared there, but there will be a bracket says that you are invested through the nominees account. But actually, it's just the same, but I would say most of the people will prefer CDS account more than the nominees account. And I believe right now, most of the broker is they just straight provide CDS account to all the investor in Malaysia. So yeah, after you open an account, then it's done. So you can start to buy or sell any preferable shares or preferable stocks that you intended to buy or sell. But of course, this is really depends on the stock or the broker coverage, because let's say some broker that provide uh, let's say US, but some they didn't. So with us, again, we are covered for Malaysia, US, Singapore, Hong Kong, and also Australia stock market. So yeah, you can buy US share with us. So next is how to analyze stocks. Now, this is important. Perhaps you could take up a paper or a book to take down some of the crucial point for you to, I would say, to start to learn, or some of the method I would like to share with you is to how to do research on the company. So first of all, let's touch about fundamental analysis. So fundamental analysis is very simple to understand. So basically, it's just read up the company annual reports, like looking into the annual reports, sees how do they perform financially. Of course, I'll be share steps by steps, like what are the things you can do through reading their annual report. So first of all, I will just if I'm an investor, so first of all, what I will do to their annual report is study their management discussion and analysis statement. Sometimes people tend to call it as a MD&A. So from there, you can actually understand what's the company performance currently, their key financial results, and perhaps it could also show that what are the futures project, or what are their futures growth plan they want to implement, or what are the project they plan to do in future. But of course, they will also listed out the potential risks and uncertainties that could affect their financial performance or their performance. So it's just like giving you a heads up and say, hey, we have not there's a notable risk could affecting our future performance. So you have to be careful on this, and and based on this, you can do your more accurate investments strategy. So this is the example of the MD&A statement by Sawe Berhad. All right, so as you can see here, you can see, I'm not sure whether you guys can see or not. So inside there, they will mention about how they are doing, how they do past year, and what are the future plans, or what are the future outlook the company plans to do. Next, I will touch about the financial reports. So when we talk about financial reports, we will start to compare their financial result with the previous year, see whether they have improved in making money, or their making money ability has been deteriorated. So you also can check on how much does the company earn from its sales. So why I bracket a segmentation there is because in the annual report, it's actually will segmentize their revenue stream. Let's say they have made their revenue from Malaysia, let's say Singapore, or other country. But no worries, I have an example later on. So next is understand how much does the company really make through the cash flow statement. So usually I would say I'm a person who more to the cash flow statement because I want to know how much does the company is actually really being made during that financial year. So when you extract out the data, so you can see here from the 2020 to 2024. So you from there you can do some of the analysis. Let's say you can do like how you can tabulate all the data and you can compare year by year. So from there you could generate a comparison of growth rate. So let's say for example, like 2021 and 2022, we can see a very significant increase in their revenue generation, right? So this is I would say the starts of how to analyze their financials report. Next is like I said just now, the segmentation. So from the business segmentation, you can understand or you can know that which business activities that the company is actually used to generate their revenue, or basically you can just understand it as their revenue stream. So this is also the Sawe Berhad. So as you can see here, their main business activity is the construction, follow up with the property development. So from after you know about their business activities, which part of their business activities is actually generate most part of their revenue. Next, you also can see on their geographic segments. So you can from there you can know where does the company revenue generated. So for the Sunway Berhad, their main revenue stream is actually in from Malaysia. Next is the India. So from here you can see, oh, there's a revenue generation from India. Then you could start to ask, what are the business activities that are actually being done at India? So from there you could dive a little bit more and search through the public or the open source data or news about this. Let's say in India, they're actually doing for also construction. They actually have some projects there, so they have made some monies there. But as compared to Malaysia, they actually the is as compared to Malaysia, actually not much revenue being generated. As you can see here, in Malaysia, they actually can generate more as compared to the India. So from there, you could know again from there from these two segmentation revenue segmentation, you would know what is the business activities that generates more revenue for the company, and also where does the company actually generated revenue. Next is the cash flow statement that I stress out quite keep stressing out is the cash flow statement, because from there you can really see how does the company's monies flow. So for net operating cash flow is basically just the money that they use or they earn through the operating activities. Next is the net investing cash flow, which is the what are the investing activities they have done and how do they really earn, or do they add any loss some money in the investing activities. Lastly is the net financing cash flow, which means is do the company raise any funds? Let's say they're taking up the loans or they raise fund through the equities. So from there you can see is there any fundraising activities. But for me personally, like I said previously, I'm more looking into the net operating cash flow because I really, really, really wish to know that how much does the company really makes, because when you go back to the financial reports of let's say you go to the income statement, the income statement, the revenue in the income statement is actually all the revenue that generated, which include the cash sales and also the credit sales. But from the net operating cash flow, you can see the actual cash sales being generated by the company. Because I would say why I look very hard in this is because credit sales sometimes you hard to collect back the money from the receivables or the customer. If any of you is doing business, I believe you understand this. So I really look into the operating cash flow. All right, next is after you have done all the financial statement, beginning of the financial statement analysis, then you will start to conduct the financial ratio analysis. So firstly, I want to share with you is the liquidity ratio, which is measuring the company abilities to meet its short-term obligation, which means if let's say anything goes bad, does the company able to pay back the short-term loan, let's say a very short-term loan, let's say invoice financing. So yeah, from there you can really see does the company able to able to pay back the short-term loans. So I would say there's a two ratios. Of course, there's more, but I just show a more, I would say a more easier ratios to all of you, which is the current ratio and the quick ratio. So for the quick ratio is actually similar to the current ratio, but the quick ratio is excluded some of the current assets of the company. So usually, if for myself, I will tend to look into more the liquidity ratio that is more than one. I mean, for both of these ratios, I will tend to look more I will look the ratios that is more than one because the ratio is actually calculated by using the current assets divided by the current liabilities. So from there, I can understand that, oh, this company can use their current assets to pay back their current liabilities, which is those short-term loan. Let's say that they have a lot of stocks, then they have also the short-term loan. Then if assuming that they sell off their inventory, their stocks, then they can have a money to pay back their short-term loan. All right. So next is the solvency ratios, which is measuring the company ability to meet its debt obligation. So here got a debt ratio and debt to equity ratio. So for debt ratio is you can understand that uh, how does the company finance their asset or or using another way to say is how do the company buy assets? For example, like buying house, sorry, not buying house, buying a machinery to continue their business. So from that ratio, if let's say the ratio is high, then which means that the assets that purchased by the company is actually being financed or that the company to is tend to take up the loan to get the assets to continue their business. So for debt to equity ratio is basically the structure or the capital structure of the company. So let's say the debt to equity ratio is high, it might possibly means that the company is actually being funded through taking up loans to continue their business. So this two ratio can let you know that how does the company is actually build up? I mean, how do what kind of capital they use to build up the company? So if let's say the debt to equity ratio is high, which it might be means that the company is actually take up the loan to build up the company. Next is the profitability ratio, which is measuring the ability of the company to generate a profit through its sales or using its asset to generate profits. So first of all is the GP margin and the PAT margin. So GP here stands for gross profit and PAT stands for profit after tax. So from here you can see their the revenue or the gross profit or the revenue they have generated, and after deduct their cost of sales, then how much of revenue they have left. So for example, here you can see 2023. So after they have deducting their cost of sales, they have the revenue still remain 74.81 percent. So which means this is I would say this is relatively still high because I believe their cost of sale is low in this year. But when you go to the PAT margin, which is the profit after tax margin, you can see it is just 13.94. So from there, you can understand that, oh, this company gross profit from 74% to 13%. So from there, you would want to know what are the expenses of the company. So from there, you could do a cost analysis of the company. So when you're doing the cost analysis, let's say the company is using a lot of they have incur a lot of cost on the this let's say the staff. So from there you can see, oh, does the company is paying the salary too high, or let's say another scenario is does the let's say their entertainment cost. If let's say the company have a lot of entertainment costs, then you want to know more about what really costs them to incur the entertainment costs that high. So from there you could do a cost analysis. Then you from there you also can know that how well does the company really manage their costs. So after you doing the GP margin and PAT margin, next you could do is the ROA and ROE. So ROA is stands for return on asset, and ROE stands for return on equity. So these two ratio is basically just understand how well does the company use the money to generate its profit. So if less for the ROA is basically just measuring how well does the company using its assets to generate its profit, and for the ROE is how well does the company using the money from the shareholders to generate its profit. So from there you can see the ROA is starting to be gain better, and also the ROE. I believe if you still remember the few slide previously, I've shared the the profit or the revenue that has generated by the company is actually relatively high. So assuming that they generate a lot of revenue or profit, then the asset is still remain the same. So when it comes to ROA and ROE, then it will be more higher because they are using the stand value of assets to generate more profit. So this could be means that the company is actually really efficient in using the money that put in by the investor, or they're really efficient in using their assets to generate the company's profit. Next is the market ratio. So this market ratio is basically just measure the company stocks relative to its key financial figures like earnings, book value, or sales. So right now I want to share with you is the PE ratio or price to earning ratio. So what does what does the PE ratio is actually telling the investor? So it actually means that every dollar that the company makes, how much does the investor is willing to pay? So at here you can see for the Sunway Berhad, the investor is actually willing to pay 26 0.64 times for every dollar that the company made. But of course, this PE ratio is also can allow you to make a more strategic investment, because you definitely will compare with other company which under the same sector, because of course you want to use your money to invest wisely, because different I would say different company would provide you a different opportunity to invest. So for PE ratio, uh, in terms of PE ratio, you can see whether the company is actually undervalued or overvalued as compared to the others companies. Next is this is more related to the news. So this is one of the example of the Sunway Hut, which is the Sunway actually shortlisting the bankers for its healthcare units IPO. So what I say this could be a market moving news is because if let's say its IPO market capitalization is, let's say, more let's say it's 250 millions of market cap, but currently the Sunway market cap is just less, let's say for example it's just 400 millions of 400 millions market cap only. So from there you can see whether does the somewhere behind is actually undervalued or overvalued. So from there you can do a comparison, and then you could make a more accurate decision. So again, so after you have done all the analysis for a single company, so you could continue to do the same to the company's competitor. So again, you basically just start again of every analysis that you've done for the single company. So yeah, you just do a peer comparison, and that's and just that you just start over again for every peers, and then you can just continue to, then you can compare that which is the best for you to invest in. So just to share about our platform. So basically the data previously I shared is through our platform, the Poems Global 2.0 desktop. So we have features called Philip Stocks Analytics. So from there you could extract out the key numbers that you would like to analyze. So next is the technical analysis. This is, I would say, very common to the traders out there. So basically, you just understand the technical chart of the company. Then from there, you could build and apply your own strategies. So currently, the type of chart out there is the line chart, the bar chart, the candlestick chart, and also the Heiken IC chart. But of course, today we will be more focusing on the candlestick chart. So what is candlestick chart? And this is it. This is the candlestick chart. I believe there's a lot of bars. Some of you might confusing what does this bar really means. So this actually, the bars actually means contains, I would say, a four information, which is the open price, which is the closing price, which is what price does the company stocks have went to, what is the lowest price, and from there they will be generating a body as shown in the slides. So of course, the wick or the shadow is basically just shown that the price of or the price that recent uh have moved to. So the green chart is actually the going up chart, the going up candle, and the red one is coming down candle. But at some platform, there might be another way, which is the red, and red is means going up, the green is going down. So it really depends on your settings. So for myself, I will be just using the green color means that the price is going up, the red color is going down. So what are the typical indicator So for if you are a new investor in outside there, I would suggest you to use just a moving average. So the 20 moving average, 10 moving average, and 200 moving average. And also you could also add another indicator to make a more more accurate decision is using the relative strength index. But no worries, I will share how to use this indicator. So if you already know these two indicator, I will some trader or investor they will more towards to the chart showing. So today I will be sharing the support and resistance chart drawing. So here again, here is the I would say example of the to how to identify the opportunity when the or the strategies that we usually people will use to entering the market. So for this chart is actually hinting that the price is tends to moving up. So we were looking for the people will call it as a golden cross. So when the shorter moving average is crossed above the longer moving average, then it might tend to hint that the price will continue to move upwards. But of course, just using one indicator is not enough. So I will be also looking at the RSI to see whether it is the market is the sentiment of the market is overbought or oversold. So if let's say the market sentiment is there's a line. So if let's say the market sentiment is below the line of if I'm not mistaken is 30, which mean this could mean that the market sentiment currently is oversold. So from here you can see there's a bottom, I would say a bottom line. The line has moved to bottom and continue to move upward. So it could be hinting you that the market sentiment currently is at oversold sentiment. So people will start to buy the stocks because this is I would say a market mechanism. You know, people when people said saw the oversold situation, then people will start to buy. And if let's say there's a overbought situation or overbought sentiment, people will start to sell, right? But of course, I will also look into the 200 moving average, which is the yellow line. Oh, sorry. The red line is the shorter moving average, and the blue color is the longer moving average. So yeah, again, back to the topic just now, which is the yellow line. So the yellow line is actually a 200 moving average. So if you are not familiar to chart drawing, I would suggest to you to use 200 moving average as a support and resistance line to you for you to identify a better or a more accurate investment decision. So if let's say the price is below the yellow line, which mean the 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 company is perhaps it could be at a downtrend. So if let's say it is above, then you could take opportunity there. Let's say if the price is currently nearby the 200 MA, then you could wait for the confirmation candlestick to form up. So if let's say there's, as you can see here, if it has already break out to the above of the 200 moving average line, but then it's failed to move upwards, so the price tend to move downwards. But then the market itself is trying to challenge the resistance line. So as you can see, next few more charts right on the right side. So it keep touching the 200 moving average, and eventually they have a breakout to the above the yellow line. So it might be understand as the market is actually starting to move upwards. But of course, this is a very subjective because sometimes it might not work because it really depends. Also, it is really needs you to have another indicator to identify whether this is a good times for you to entering the market. So next is again, this is the downtrend, I would say downtrend opportunity, which might hint you to to sell your stocks, which is again the red color is the shorter moving average, the blue color is the longer, and then the yellow color will also act as the support and resistance line. So from there, you actually can be the you can use also, again the same strategies, which is you can also using the golden cross strategy, which is when the shorter moving average cross below the longer moving average, then it could be hinting that the price will start to move downwards. And also you can see from the relative strength index indicator, it also shown that the market sentiment is actually at overbought sentiment. So the investor in the market will tend to start to sell off their shares. So next is a little bit of about the chart drawing. I try not to touch too much because I assuming that some of you are still new, so I try not to touch too much on the support and resistance lines first. So first of all, so basically you can imagine this support and resistance line is the floor and the ceiling. So the ball could bounce to the floor and bounce upward to the ceiling. So from there, they will keep trying to bounce and bounce and bounce within the range. So if let's say they have breakthrough the resistance lines, as you can see here, the resistance lines has become to the support line. So so we can understand that these two lines is actually interchangeable. So sometimes it could be support line, sometimes it could be resistance lines. So it really depends on the price action during that time. So what are the strategies that people will use is when the price is touching either one of the line, then there will be starts to entering the position. So if let's say the price is touches the support line, then most of the people will tend to assuming that the price will bounce up, move upwards. So they will entering the buy position during that time. So lastly, I want to share some of the strategies that people use to invest in stocks markets. So I have a few here. So first is the value investing. So it's very easy to understand, which is buy stock that is undervalued and hoping in future the value of the stocks is will increase. Next is growth investing. So this is basically just buys those stocks that has a huge growth potential. So usually the growth investing is more to those technology investor because tech sector is usually have the huge growth potential as compared to other sector. Next is dividend investing, which is you invest to a company, then you expecting them the company to pay you some I would say or profit sharing with you. So the profit that share with you is called as a dividend. So for the dividend investor, they will just buy those companies with uh, will pay a good dividend to the investor. So lastly is the dollar cost averaging strategy, which is buy stocks at different period for minimize the cost caused by the fluctuation. I believe DCA or dollar cost averaging is more well known among the investor because this is, I would say, this is one of the best way to minimize your risk. So I have an example here. So I have made a two comparison, which is the DCA, and also you just straight put in all your money into the stock market. So what are the effect or what are the result will be generated through this between these two method. So for example, Mr. Ali buy company ABC shares. So assuming that Mr. Ali has 400 to invest in the stock market. So this below is the outcome of the shares or the performance of the shares. So Mr. Ali entered at 10. So the price recorded for the first month is 15, the next month is 8, and the third month is 10. And when Mr. Ali want to exit the market, the price is actually at 9. So if let's say Mr. Ali is using DCA to invest, so he will be using 100 uh, of his money to every month to invest into the stock market. So as you can see here, if let's say Mr. Ali straight using his 400 to entering the market, he will just having a 400 units of shares. But if of course if you go to the DCA, because of Mr. Ali just used 100 to invest into the stocks market. So initially he will just receive 10 units of shares, but from time to time, the units of shares holding by Mr. Ali will be keep increase. So actually during the exit time, Mr. Ali actually has more shares in his hand as compared to if he put all his money into like all his money at one time to the stocks market. So what are the effects from this between these two method is, so for scenario one is using DCA, for scenario two is the using the lump sum. So again, the total amount invested is the same. I think I have made an error. Should be 400. Sorry, should be 400. So when Mr. Ali is exit the market, so the when he sold all his shares for DCA, he will be getting 237.5. But when he's sold out, if he using the lump sum method to invest into the stock market, he will just get 200 only. So from there, you actually can see the difference between using DCA and lump sum. So actually, from there, you can see that DCA is actually lower down the risk due to this DCA could lower down its cost to acquiring the stocks of the company. So from there, there's a difference between these two methods. All right, so I believe it has almost come to the end of my presentation. So here are some key takeaways. So I believe all of you have gained an understanding of how does the Malaysian stocks markets works, and also learn how to choose a suitable broker. For example, you could just find us. We are a licensed broker in Malaysia. So you will also have developed a basic knowledge of fundamental and technical analysis. Lastly, is also you could also find or identify the investment strategy that best suits your goals. Because this is I would say the investment strategies is very subjective to everyone because the goals of everyone to invest is different. For example, you want to retire at 60, I want to retire at 70. So from there, we could apply a different strategy. So this is just an example, of course. So I have two quotes to share with you, which is the stocks market is filled with individuals who know the price of everything, but the value of nothing by Philip Fisher, and also Know What You Own and Know What You Own It by Peter Lynch. This too is actually a well-known American investor. So this two quote is trying to say that whatever you invest in, you have to do your own research first and know why you want to invest in let's say you want to invest in a company. So this these two quotes has shown that research or do some homework is really crucial for you to success in the investment space, because investment is a long journey. It's not a quick rich scheme. So yeah, before you try to or you want to invest in anything, please do your homework first or do your research first before entering the investment. All right. So, is there any questions from the floor? Let me see. Okay, I saw there is a few questions. Oh, okay. So one question: if candlestick is green but Heiken Aishi is red, indicating up or downtrend. Okay. So for the Heiken Aishi is actually more I believe Joey. So I believe Joey, you are I would say a more advanced investor or trader. So for Heiken Aishi is actually more to those trend trader or investor. So actually, Hiker Aishi, if let's say it is, of course, the color itself is still based on your settings. So if let's say the Hiker Aishi is red, for my setting is actually meaning that the price is tend to coming down. So same as my setup for the candlesticks. Yeah, I hope this answer your questions. Any tips for US market in a bit? Well, to be honest, currently the US market has go bizarre, the Trump administration today can say, hit a tariff to let's say Malaysia tomorrow, try to pause. I believe you saw the news, right? They try to charge a tariff at first, then suddenly stop. So for me, at the moment, US market, I would say hard. For me myself, I still can't find a good opportunity because the market is tends to move up and down vigorously. So the volatility currently, I would say it is quite high. So, but of course, if let's say you do your research, you do your homework, you found that there's actually a good company to invest, and when the price of the stocks is actually quite low, so it actually is buying the stocks at discount. So why not? If you found a good company to invest in, yeah, you can just go. All right. I try not to take up most of I try not to occupy your time too long, so I just answer these two questions. So yeah, back to the presentation. So again, so if let's say you want to open any account with us, you can scan this QR code to conduct the online account opening. So if let's say you're facing any difficulties, you could just Google search our hotline number, then you could just contact us, and then my colleague is happy to help all of you. No worries. So how to contact us? You can follow our Facebook, we also have the YouTube channel, we have Telegram group, we have LinkedIn, and recently we also have TikTok. So we actually post some of the quizzes and some of the knowledge sharing in our TikTok channel. But of course, you also could follow our Philip Capitals and Remember Heart Instagram to know what are the upcoming events or what are the information or what are the promotions that we currently have. Now, of course, ultimately, if you want to know more details about the the promotions or the upcoming events, you could straight to our website www.philip.com.my. So if you want to get the updates or recaps on the latest markets or any news that you want to know, you could scan the QR code for stocks. Is the top one. The for derivative is the bottom one. So from there, we have our team to share the market updates to our clients in the Telegram group. All right. So I believe if you couldn't scan, you can take a screenshot first and scan afterwards. So again, I'm Charles from Kota Damansara branch. So if let's say you are in any parts of Klang Valley or KL, if you want to know more or book a private coaching with us, you could call the number or email to us. Then we could arrange the private coaching session with you. So if let's say you are outside Klang Valley. So regardless you are at even in East Malaysia or you are at East Coast region, you also can contact us. So you can take a screenshot. So if let's say have you want to send some inquiries to us, no worries. You could just call the number or you could just email the inquiries that you wish to know. All right, so it has come to the end of my presentation. So I really hope that all of you have learned something, especially to those who are new to the investments in stocks space. So again, investment is a long journey. It's not a sprint competition. It's a marathon. So a proper research is crucial for you to success in investment in stocks. So perhaps we could maybe we could do I could give you a little homework to all of you. So maybe you guys do some of the research. Then maybe you could reach out to any of my colleagues and ask for their comments or ask for their opinions, you're welcome. You're welcome. So yeah, so again, do your research before making any investment and don't fall for any scams. If let's say you think it's a very suspicious person reach out to you, do search their name or their company behind through the Securities Commission Malaysia website. So from there you could identify that whether this company or this person is a licensed person. For me myself, I'm a licensed person. You could search my names there. So again, thank you so much for your time. Good night and goodbye, everyone.